Good morning all. So today we're going to be discussing how you can use the MACD alongside the RSI with volume, and it is a follow-on video from my previous video to aggressively trade long for profits in the stock market. Now, a buddy of mine recently on with him on a live Tiki Torch was using I think it was an AI computer system to predict and backtest this strategy, and it's quite a complicated strategy for the AI bot to get a grip of. So I'm going to explain to you in my own words how the strategy works, and it's so simple that everything will begin to make sense as you watch the video through to the very end, and you can use this on any charts that you want to. Now, we use this to identify when a stock is ready to trade and for signals, because as an institution we can't day trade. Doesn't mean to say we don't know how, it's just we've got to strategically place our orders into the market, whereas you guys have the advantage of getting in and out at any time as day traders. So with that being said, disclaimer, it is not financial advice, okay? Trading is risky, as you well know. Prices can go up and down, as can your investments. Do your own research. This one is for educational purposes only, and I pretty much guarantee you, if you stay to the end and it all falls into place, this will be the strategy that you will use from now on. On the screen at the moment you can see Marvel, and the reason I'm using Marvel is because Marvel in July, it had that aggressive downside bearish sell-off, okay, from roughly $280, and that is what we're looking for. And you've probably heard it say plenty of times, never catch a fallen knife. We're not catching a fallen knife. What we're doing is we're using the indicators to identify a few things, okay? In relation to the RSI, what we're asking is, in relation to the strength of the bearish momentum to the downside, when is it beginning to be exhausted, slow down, and showing signs that the bears are no longer there? The MACD, what we're asking is, in relation to a divergence and convergence, the closing prices, where are they at this present time? Okay, and then in relation to the signal on the MACD, where is that moving average convergence divergence in relation to the signal line? Now, the monthly chart is going to absolutely contradict everything that we're going, or everything that you've been taught, okay? However, it will make sense. Now, if you look on the volume, ignore August, okay, which is the current blue candle you can see forming on a monthly time frame. We're trying to concentrate on the white candle to the left of that, which is July's order flow trading action. The volume it had substantially reduced in the July. The MACD is still rising, okay, but the RSI had took a big dip towards equilibrium of the RSI, close to an RSI of around 50-55. Now, the MACD says momentum is still there to the upside, but becoming exhausted. The RSI, on the other hand, says the momentum to the downside is taking place and beginning to increase, but into a previous, if you want to call it, level of support, basically a price where there is heavy traffic. Now, what we're saying is, for August, can we, or is there a setup to trade Marvel long, to retrace bullish and retest that previous open level to the close on that bearish candle in July. So what we're going to do now, okay, again, ignore August's trading action. Ignore it, switch off, don't even look at it. Concentrate on the last week of July's and previous indicator historical data. At the very bottom of the screen you will see Monday the 27th of July. Look to the left and you will see the historical data of order flow coming into Marvel with the indicators, how it's reacting. What you'll notice on Monday the 27th of July, the RSI and MACD and the volume indicators reveal something very different than it does to the monthly. Now we know the month of July for Marvel was very bearish, aggressive bearish, okay, with a full retracement back into this previous level of interest support. However, the RSI tells us another story. The RSI became oversold near the 40s. The moving average RSI in orange was also on a decline. The MACD, again, showing bearish intent all the way to the downside. And the volume still low. Now, what we're saying is, we're looking at trading Marvel long. Although it's been in a huge downtrend for the whole of July, we're looking to trade Marvel long. Now we can't use the weekly time frame because it's too slow in the settings. If you watch that previous video, you'll be able to understand the settings, okay? So we need to go down to a daily now. Okay, well, Monday the 27th of July, Marvel's flagged up into an area of interest. We need to go down to the dailies. So we're going to go down to the dailies, and now we're going to see how from Monday the 27th of July to the Friday of that week, how the indicators reacted as accumulation began in this price zone, ready for the upside momentum, bullish order flow for August. And this strategy works on any stock. Now bear in mind, we only trade stocks that are undervalued in relation to tangible assets, free cash flow growth. But that does not mean to say that you can't use this strategy if you are just a technical chart trader and look for signal entries, okay? So we're going to go down to the dailies now. Okay, now we've gone down to the dailies, we're now seeing another completely different story in relation to the weeklies. We know that the weeklies was again on a downtrend, it was oversold. However, the indicators now are performing much more aggressively to the order flow coming into Marvel. Okay, now what we've done is we've already marked off areas of interest to us back in June, which you can see on the screen at the moment in blue. Okay, now Monday the 27th of July, the RSI completely oversold with a 6-day moving RSI and a 13-day moving RSI, both near, well, the 6 days it oversold in the 30s or even lower. The 13 is oversold in the 40s. The MACD, okay, the MACD 6 moving average in white has already crossed, okay, has already crossed the orange 13-day moving average signal line. The settings on the MACD, remember from my previous video, is a 6 moving average versus a 13 moving average with a 13 moving average signal line. We're asking, Has price begin to diverge away from the 13 moving average? Yes, it has. Has price closed above the signal line? Yes, it has. But it's oversold. We already know this because we're looking at Monday the 27th of July. We're in the highest previous traffic volume area of Marvel, dated back to, I think it was May and June. Now, we understand and we can see clearly on the screen from the 27th of July, the order flow coming into Marvel began to swing bullish. MACD was rising, signal lines rising, volumes back up near the averages. RSI is also travelling back up towards equilibrium, RSI of 50, and by the Friday it becomes closer to the overbought zone, showing bullish intent. The MACD very close to the zero histogram, both signal and MACD rising towards the zero histogram. Volume is still there, and then what we see is a gap up in the August as that really aggressive buying caused the gap up because there was no more shares to trade hands at around $190. Now you might ask yourself, right, okay, that's where I want to be trading from, $190. But I'm going to throw a spanner in the works. Take a step back for one moment. Pretend on the screen you can see a pedestrian crossing. At the $190 level, there are the bears. At the 161 level, there are the bulls. You are standing opposite sides of the pedestrian crossing with the light showing whether you're ready to go and walk across or not. You want to go long. So, are you standing with the bulls or are you standing with the bears? This might confuse you, but just take a moment to think about what I'm trying to say to you. You are actually bearish at the moment, and you are standing, okay, on the bears side at the $190 level. Okay? It is Monday the 27th of July. You thought to yourself that you were going to trade long from $190, but you're not. You're going to trade long from $161 because you know the very likely chance of you getting a fill of your buy and sell orders within this price range, the probabilities stack much higher, as long as you use the strategy correctly. So, let's begin. We are bears, okay? We are standing at the $190 level on the pedestrian crossing. We're facing the bulls. The bulls are going to cross this road at the same time as us. We're now crossing the road. We get to $179 and we exchange money for shares at this price level on the Tuesday. By Tuesday's close, we're now at $161. Potentially, we've still not fully crossed that road. Okay, we might still be able to fill some orders at an even better price, $161. And realistically, it's at this point that you want to fill another 25% of your position, whatever it may be, position size. Now, on the Wednesday, we are now standing on the bulls side of the pedestrian crossing, and we're now facing the bears. We've got roughly an average price of, say, maybe $175 to $179. you might decide that you're still not ready to sell, or you may decide that you're ready to sell and you want to sell. So two scenarios: lights change, bears begin to cross the road, you're now a bull with an average price of 175, 179, and you then again begin to exchange your shares with the bears. You've exchanged all your shares, you're now standing on the bears side. You maybe have a very small position left. You can either, one, hold it and then rebuild back your position again, as you again, same scenario, you're now a bear, you're crossing the road, you've already got a position, but you're now going to fill your bag a little bit more as you hope price will retrace back towards the $179 high traffic volume area. Or you may decide to hold it and just break even, or hold it, don't buy any more shares, and hope there's a probability of a continuation next week with your small position size. So we cross the road on the Friday with a bear. We're crossing the road, we're going to the bullish side of that pedestrian crossing. We decide, with the profit that we've made, to add to the position that we've already got, which we said roughly we had a price of around $175 or $179. This time we fill a large order, okay, 50%. So we had 50% to start off with off the position size, sold 25% on the Wednesday to the Thursday, and we're now holding 25%. We now fill another 50%, so 75% of the position size is now full. You've now got another position in your bag, in hope that you either are stopped out, okay, you're still in profit but you stopped out, you break even, or you still believe that the momentum is still there, looking at the indicators, RSI, MACD, volume, that the breakout occurs from $190. Scenario one, luckily enough, you cross that road, you're standing on the bears side. However, the price has now changed on Monday in August. You've changed from a bear side to a bull side. You're on the support side. Price action's already begun. It's already gapped up. You may decide to sell immediately. Don't be greedy. Sell it. So what if it continues? Sell it. Be patient. Wait for the same setup again. Okay? Or scenario two, you're greedy, you hold, and you try and take even more money. Not for us, but that's the mindset of certain people. Okay? Quickly, RSI. Let's go over what actually happened that week. RSI crossed your 13-day. So your 6-day RSI showed bullish aggressive buying intent. It crossed the 13-day RSI, and that continued right up until the Friday, and it became overbought for the whole of August. The slower moving average, the 13-day, also was in line with that bullish buying intent. The MACD has now crossed, okay, already crossed that zero histogram. The 13-day MACD followed suit a few days later, and volume was still up. The weekly, okay, the weekly from Monday the 27th of July, the faster 6-week RSI showed that it met equilibrium on the Monday the first Monday of August, and it slowly showed that buying intent. However, the MACD still lagging on the weekly. Now by this time you'd already be out of your position anyway, okay, but what the MACD is showing you, okay, that the longer term order flow for Marvel is still potentially bullish. Your 13-week MACD signal line is coming to the downside, okay. Your 6-week MACD moving average convergence is moving towards your 13-week. There is still a potential that it crosses again. RSI 6-week now, faster moving average RSI is in the 50s, 60s. Your 13-week RSI, okay, is coming down. Again, they're about to cross. Unfortunately, one thing that would not make me take the trade is volume is still low. For the weekly, it's 195. Volume's 116 million. I would not look to trade Marvel. I'd be happy with the position that I took, the profit that I took, and I would wait for Marvel to come back to me, to a high volume trafficked area where I know the probability of support from my fellow investors, traders, retail traders is still there. Monthly, on the other hand, volume low, MACD very stretched now with the I think it's a 13-month, so yeah, 13-month average orange signal line, okay, not stretched, but the 6-month MACD is stretched. RSI has held in and around 60 to 65 on both the slower 13-month and the faster 6-month, okay, so a lot of hesitation on the monthlies. Still bullish, still the potential that it gets to $320, okay, but not convincing enough for me. I hope that video's been informative to you, and if it has, by all means, please leave a comment. What are you watching at the moment? Would you like to use your ticket that you're watching to go over the same strategy? Thanks for your time.